Hey everybody, so most traders are looking for a strategy that always makes money, and that's exactly why they consistently lose money. In this video today, I will show you an approach that works not through indicators or luck, but through logic, risk management, and making the right decisions. We will move directly to practice, analyzing the market, trades, and the exact moments when it's better not to enter at all. If you want to stop guessing and start acting consciously, pay close attention. Also, remember, I have my own Telegram channel where I share my strategies, tips, and I have access to copying my signals and a lot of interesting other information. So be sure to subscribe. I'm always happy to share all of this with beginners and more experienced traders alike. Let's go. If you think that the main thing in trading is strategy, you're in for a surprise. So that's not entirely true. Strategy is just the tool you can learn, but the result depends on your mindset and approach. So before jumping into trades, it's important to understand one thing. The market isn't about speed or guessing. It's about expectations and correct entry points. So you need to master self-control. Avoid impulsive, reckless decisions. Your trading shouldn't turn into chaos, but should be stable with an analytical approach. I won't drag it out. Let me show you the real deal. I'll open a few trades, explain why I'm entering the currency pair, why at specific moments, and why at other times I simply watch and do nothing, and how I control risk in each situation. So now let's move the chart of the first currency pair. First, I will check different time frames. That's the golden rule. I usually look at the 1 hour chart to determine the trend. There was a clear uptrend you see from the rise here. Let me mark the previous low. Always mark levels, okay? This will help us see the changes of the pair later on. So here a rise begins, and now we see a slight tendency toward leveling out and a downward trend. Probably the volatility isn't high, so I think the low will reach this level and there might be a confident entry for long positions. What else I want to mention about risk? Remember, risk only like 1-2% of your deposit per trade maximum. So, and only after you've practiced on a demo account. Demo is exactly the same, so it's a perfect place to train. So for each trading session, don't allocate more than 10% of your deposit. Once that limit is hit, trading stops, dead stops. No catching up, no emotions, no pressure. This isn't weakness, it's a professional approach that lets you learn over the long run, okay? I want to speak briefly about the key part of today's video, time and expiries. I don't trade on ultra short trades, like 5-10 seconds. Occasionally I trade 15 seconds, but only when I see a clear pulse. So when the pulse on short time frames follows the trend, then I might open several trades. Mostly I trade on 1 minute charts, and I set myself accordingly right now to 1 minute because I'll be placing minute orders. Why don't I ever enter short trades? Because a single candle won't show you the whole picture, okay? So for the price to hit a level, give a reaction, pull back, or break out, it takes time. So analyzing a minute chart, the trade duration should be longer than one candle. That allows space for logic, not guesswork. So right now, several candles are forming on the rise. You could go long. I'll just buy and wait. So what do we see here? According to the 2 candle rule, we've just had a small breakout downward, but it's likely a reversal, becoming the long. Previous candle is supported by the 2 others. So the price has already reached the lows, and now it could be a moment for a trend reversal, roughly up to these levels. Let me mark the chart. The candle is forming an upward movement, but we don't rely solely on one candle. Instead, we analyze multiple time frames, determine the trend, and then enter at a confident moment when previous candle behavior confirms our logic. So we trade based on logical analysis, not guesses or impulsive button mashes, just pure analysis, chart and understanding. So with experience, with tech analysis, it becomes faster. So don't worry if you're just starting. Spend plenty of time practicing and you'll see profits like we did right now, and we got a successful trade. Excellent. So here's the logic of our entry. We saw a pulse upward. The price reached the previous low, and according to the two candle rule, we entered. So then a large candle formed, followed by a small reversal downward, and now a series of candles is forming. So we enter here because a good pullback is happening right now. This level is likely to hold as previous behavior suggests. So we waited for the pullback, entered, very straightforward. So it's very important not to only determine the direction and trend, but also to choose the right entry point. That way you'll definitely trade profitably. First, I look at the context, where the price is located, and if there are support or resistance levels, zones where the market might logically react, or if the market is in consolidation. So as I mentioned before, I don't enter trades in sideways markets. Not taking a position is also a decision. It's part of the proper approach. If your tech analysis indicates not to enter, that's already a big step. You avoid losses and don't risk unnecessarily, okay? I believe we'll close this trade in profit, and as you see, we do in fact close in profit. Right now, a potential reversal is forming. I'm considering a sell. A fairly large candle is forming downward. I won't enter a sell right now, but I think it's safe to enter a buy because we're riding the trend. So the price could reach these levels where large buying candles are forming. So you can see the current situation. There's a slight pulse, but we entered very well. So even if we close some trades at a loss, remember the martingale system. Eventually you can recover losses. Just set boundaries, okay? No more than 2 losing trades and a stake of 1.5 or 2 times your deposit. Don't get fixated on this. Better to exit early with small losses than to risk blowing your account using the martingale without logical reasoning, okay? So right now a reversal is underway. It should break through our level, and the second candle is forming. I believe it will close soon. Oh, it's moving strongly. Very, very good. And I anticipate it will continue to these targets. And as you see, we're closing in profit again. So we're on a roll of 3 successful orders. Congratulations. Next, I'm gonna move to another currency pair. Okay, so right now I'm gonna examine the hour chart now. Here we can see a very choppy, somewhat stabilizing sideways pattern with relatively strong volatility in this area. These patterns indicate that the market might reverse now, either upward, downward, so be very, very cautious. You see these small candles indicating that the market is moving back and forth. I do not recommend entering right now. This aligns with what I mentioned earlier. So understanding the logic of the chart and making the conscious decision not to enter is already a significant step. So the reason is high volatility here, and as I said before, the market could go either way, up or down. So therefore, I'll choose a different currency pair, and when selecting a pair, always take into account the payout. Let's look at the hour time frame. So there was a decline, then some sort of stabilization, and now a downward trend has been developing over the last hour. So let's check the impulse. It's slightly upward right now, so we can wait for a pullback and then enter a buy position. So while I wait for a small correction, I'd like to talk about adding 2 positions. Adding to a trade is not a rescue, okay? So if you add without a plan after a unsuccessful trade, you can end up losing everything. So I just opened a buy, and you must define in advance where your next zone is. So what percentage of risk you're comfortable with and where you will stop. So this must be premeditated. If you have 5 consecutive losing trades, that's the rule. It means your logic has broken down. Something is not right and you need to review it. So no excuses like try again or maybe it'll work this time. If it's not working, there's a problem. You need to find a different approach, analyze what went wrong and correct it. Right now we can see a good candle forming, an entry signal. We waited for a pullback to the level and opened a position. So a reversal has begun right now. The buyers have activated and the market is turning. So as seen in today's analysis, trading is very straightforward. Understand the candle behavior, identify key levels, consider the risk, and plan your trades accordingly. Another win. Everything seems very simple and accessible. No complicated settings or indicators needed, as you can see. So it's all based on understanding the chart. That's a very key point. You have to remember that. Okay, so now I'm gonna withdraw my profit. So as you can see, I have $4,007 on my account. Today we earned around $700, so I'm withdrawing the $700. I'll just select my wallet, enter the amount, and press continue. All the funds are sent. It says that it takes a few days, but in reality, the money arrives within 20-30 minutes. Once again, I remind you, if you want to see more strategies, tips, or insights I use personally, more information about the trading, economic news, how news affects the market, and what overall influences it, subscribe to my Telegram channel. The link is pinned, and feel free to leave comments. I'm always happy to answer questions, help beginners, and share experience with more experienced traders. So my goal is for you to earn steadily and achieve consistent profits. So in conclusion, a very important point, success in trading isn't only about strategy. The key to trading is psychology. Why do many succeed on a demo account, then struggle with real money? Because on a real account, fear and greed appear. There's also the desire to accelerate results. Markets feel it instantly. So until you learn to think in percentages rather than fixed amounts, there will be no real success. If you limit your risk, wait for the ideal conditions, avoid rushing, and don't trade on emotions, your results will improve. It might not happen overnight or even within a week, but they will be stable if your approach is correct. If my logical, calm approach resonates with you, I share it regularly. So I'd be glad to see you on my upcoming videos. Bye, guys.